Today, Bitcoin breaks through $57,000 for the first time since December 2021. Do Kwon's lawyers warn he could miss the start of his U.S. civil fraud trial. And the CEO of Digital Asset Research breaks down the data from the firm's latest update on crypto ETFs. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin extending a rally today, reaching a two-year high above $57,000, lifting the broader crypto market. As of noon Eastern, Bitcoin traded just under $57,100, but earlier it rose to $57,445, its highest level since December 2021. Now, Ether traded around $3,200 at noon, but earlier reached a high of nearly $3,300, its highest level since April 2022. Polygon's Matic token, however, dropped nearly 2%. Now, U.S. crypto-focused stocks also surged in this morning's trading, with MicroStrategy jumping more than 9% and Coinbase rising more than 3% as of noon Eastern. The two crypto-related companies have seen their stock prices grow more than 230% over the past year. Now, Bitcoin's gains come on the back of MicroStrategy disclosing yesterday that large purchase of about 3,000 Bitcoins for $155 million. Other bullish factors? A surge of funds into Bitcoin ETFs and the cryptocurrency's upcoming halving event. We'll have more on that in just a bit. Okay, let's talk about the top stories. Do Kwon might miss the start of his U.S. civil fraud trial. Attorneys representing the Terraform Labs co-founder submitted an update to the court yesterday, saying Do Kwon's extradition to the U.S. was taking longer than expected due to unanticipated mistakes by the High Court in Montenegro. Because of the delays, his attorney said he likely won't be present for the start of his trial on March 25th. That said, his lawyers told the judge they won't ask to reschedule. Now, this trial is over civil fraud charges brought by the SEC, but Do Kwon also faces federal criminal charges from the Department of Justice in connection with the collapse of Terra Luna. Next, Republican lawmakers are taking another swing at banning CBDCs. Senator Ted Cruz introduced the CBDC Anti-Surveillance Act, which would bar the Federal Reserve from issuing a CBDC and, more broadly, prevent the central bank from issuing certain products or services directly to individuals. Republican Senators Bill Hagerty, Rick Scott, Ted Budd, and Mike Braun signed onto the bill, and it received endorsements from outside groups like the Blockchain Association, which said CBDCs present, quote, major privacy concerns for everyday Americans. The bill would have to make it through the Democratic-led Senate before moving on to the House. All right, back to markets for our main story. I spoke with Doug Schwenk, the CEO of Digital Asset Research, for insight into what's behind the crypto rally. We also discussed the research firm's latest update on crypto ETFs and what the data reveals about crypto sentiment. Big day for crypto, with Bitcoin hitting a fresh high for the year, trading above $57,000, surpassing that mark for the first time since December 2021. Ether also hit a new high of $3,290, its highest level in about 2 years. So what do you think is behind the recent price action? What's moving crypto markets right now?
Big day, big week, and a big couple of months for crypto in general. I think we've got several different stories happening. One is certainly the volumes in the Bitcoin ETF have really picked up and animal spirits are back. People are trading it, and the demand has been very strong, creating better liquidity in U.S. markets and bringing with it more investors. But if you look at the story of Ethereum, which I think is even more interesting, there's lots of things happening with the Ethereum network. You have a big conference this week with ETH Denver. You have the restaking upgrades to the protocol happening. And if you look at that, the trajectory of Ethereum, of Ether, has been much more of a steady climb, whereas Bitcoin seems to be finally kind of catching up to what's going on in other parts of crypto markets.
So how big of a role are spot ETFs playing in the recent rally? I read that you said that the products signal movement toward greater acceptance and legitimacy for the crypto industry. Can you elaborate on that? And what do you think has changed since spot Bitcoin ETFs started trading here in the US, and what's next?
So it certainly has changed market structure. We have seen more of maybe what we would think of as retail and or wealth advisors or others who now think that adding that ETF is a safe choice to their existing portfolio because it doesn't come with the traditional discount that the Grayscale Trust had before it became an ETF that caused a lot of people not to want to hold it in their brokerage account. And it does put a patina of legitimacy on something where we're seeing this especially in the financial advisor space where they say, okay, we know that this has been a source of outsized returns, and we know that this would be good for our clients. But if it's not in a wrapper that we can trust, and it does really help to have these big brand names, a BlackRock, a Fidelity, a Grayscale with these ETFs that I think give people a lot of confidence that some of the issues they might expect in Bitcoin won't be a problem.
So you're the CEO of Digital Asset Research, a provider of crypto data for institutional clients, and the firm offers a monthly update on crypto ETFs. Your report covers more than 160 crypto exchange traded products, and some of the highlights include total assets under management, which most recently is nearly $55 billion. What does this signify to you?
Lots of money flowing into those ETFs, and we've seen that with the numbers in these U.S. ETFs, and to be fair, some of it flowing out of the European ETPs, where historically those were the major place for listed products. It was not very long ago, just last year, that the total listed space was about 8 billion. At the end of January, it was 42 billion, and now here we are about 55 billion. And I think there's a combination of money flowing in as well as, the prices as it goes up. Of course, then assets under management increase, and with $57 Bitcoin or $57,000 Bitcoin, that really does help that AUM number quite a bit.
So based on your research and what you're noticing, which spot Bitcoin ETFs in the US are commanding the most attention? Which are proving to be the most popular among investors?
I think that based on brand and volumes, I think the BlackRock ETF has been a favorite. Certainly a lot of attention on the Grayscale ETF as well, given all the work they did to kind of pave the way with the lawsuit and other activities. But most of that work, I think, or most of the attention right now is, how many people will stick with the Grayscale ETF. There was quite a bit of selling initially. That seems to have leveled out a bit. But those are the two that we spend a lot of time talking about with clients. There are certainly some others that have had, great growth stories, but I think those are the two that have stood out the most. I guess the third one that I would mention is the Franklin Templeton ETF, and I think that is very interesting because they have so many other things that they're doing in crypto, such as tokenized money market fund with their Benji fund, and that is helping them to build out a product suite, which I think is going to be very interesting, and a lot of our clients are talking about that.
Before we go, I would love your insight on the fact that 10 spot Bitcoin ETFs are trading here in the US. So what do you think will happen there? Do you predict some consolidation? And which would you say are best positioned to survive?
I do think there's going to be some consolidation. It is hard to imagine that there are going to be 10 Bitcoin ETFs that are not differentiated. And we did see this sort of race to lower fees, which did generate AUM for some of the funds. Some of them may hang on with fairly lower AUM numbers, but I do think that brand matters a lot. And I think that as we get more retail and more wealth advisors and others, I think the likes of the Franklin Templeton, the Fidelity, the BlackRock, and the Grayscale will probably be the most recognizable and most likely to persist. What will consolidation look like? It's hard to say. We're talking to a lot of clients who are trying to think about how to differentiate in the next product. Maybe that would be a Bitcoin and gold ETF, or maybe that would be a Bitcoin and Ethereum mix, or maybe even something with equities and Bitcoin. in order to not be just 10 copycats of basically the same thing with slightly different fees and maybe slightly different service providers.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.